Good morning, everyone. It's 31st January 2017, and welcome to this edition of ProAMT Traders Digest. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All indicators, strategies shown in the video are for education purpose only. All levels discussed in this video are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any trade decision based on this video. We will not be responsible for any resulting profits or losses. So let us have a look at what Nifty has done. Open in range goes below the range, below previous day's range to see what lies below. And the expectation was that because it is trending up, the expectation was that it opens in the higher quadrant and pushes up and fails and comes down to fill the gap. Now the open was already lower. It did not get anything in the gap zone. So once it starts trading within the gap, the expectation is to check any selling interest left around the point of control of the previous day. Now what it did is in a spike up in the J period, it repaired this anomaly and then instantly pushed back down. Now a huge spike, auction failure to stay above the IB. K period tries to again go past the IB but again fails, and then finally L and M period settling within the K period range. Closes above the developing point of control. Neutral sort of close because the value has developed lower, but still the value is within the spike. So this short covering stem is there, which created new business in this new contract actually, and the value is still within that. Till it stays within that range, the trend, even the short term trend, will be still up. Once it starts accepting below into the gap, then we want to see what it does below this 8615, and depending on that we can assess the short term trend reversal. Otherwise, what can happen is if it starts trading above 672 again, acceptance above that would lead to higher levels. Now on the 1 minute chart, you can see post this this is a rejection into the previous day's last hour balance, last 30 minutes balance. Pulls get sold off from there, the delta going negative. But if you see, when it comes back here, the supply is taken out. There is no supply when it comes back down to test the lows, and when that happens, you can see this spike. So this spike, the initial morning spike, has resulted in a spike as well as a stopping volume because the range is way lower than the previous day's last 30 minutes range. So all of a sudden it has gone into a selling, and hence turns out to be a stopping volume. A test is required. This results in a test, and then you get a higher low. Now because it is trading within the range, the auction does not have any directional confidence. It will be safe when it breaches this high anytime and creates an upthrust. It would be safe to sell on any test, but only for a rotation down towards the day mid and rotation down towards this, if you can see, this micro balance. So any auction into that micro balance would again result into a buying opportunity. So what it did is it resulted in a spike, gave a test, came back down to the day mid, but could not fetch any supply further. If you can see, no demand was coming and no demand is crossed. Again comes back down to test that no demand high. There is no supply coming in there, and finally results in a spike. This spike up got enough sellers in. The delta went positive and instantly lost momentum. The moment it lost momentum, our objective is that it will come back to the day mid, failing which, see, it comes back to the day mid, tries to bounce off, fails at the IB high, and the objective is to come into this balance, and it finishes that objective, a buying opportunity here for a revisit of day mid again. So these are like various opportunities in a rotational day, can do multiple trades with the least stop loss, and almost like these days settle near the day mid, and that is what has happened. On the 15-minute, you have this software has marked this as a stopping volume just because of this, that it pushed into the lows, but the close was higher. So a stopping volume needs a test. So a test coming in, final test can be this, because a negative bar and closing into the range. So that was the final test it got. That test created that momentum that was required to go on the upside and check for the sellers. Goes up, the buyers getting too emotional to buy, and those buyers are now in trouble when they are just going up. The auction is moving higher and they go to buy. A decent selling coming into these highs, and the delta goes negative. Finally, closing spike, maybe intraday orders getting covered. So overall, a balanced day with a HVN at the previous day's point of control, 8673. So 8672 is the HVN. So that becomes again a very important level. Now let's have a look at the Renko. Sorry. So in the Renko, we have a very awkward move up, and so the opening swing was not clean, and when the opening swing is not clean, we expect a revisit of the open. That happened in this impulsive move down, no continuation coming in, and then goes into balance, impulse up, push down, and again impulse up, push down, failed to create an impulsive move. When it fails to create an impulsive move, then the expectation is that it will create an impulse down. Impulse down, push back, impulse down, and again fail to extend into a third impulse, and finally settles into the high volume zone, so which is the highest traded volume during the day. So starts zipping around that level. Overall, pretty balanced auction in the range of 8663 and 8640. So the entire volume generated in those 23 points. Now the expectation for today would be, just a second, I'll pick my pen. Annotate and a pen. So if it opens somewhere into this zone, either here or in the lower zone, so If it opens inside the range, then expect it to push back down and find again what lies below this 615. If it doesn't find anything, then make its way higher by coming back, testing, and pushing back into the range. What I'm expecting is open below the range somewhere into this zone. So what will happen is it will come back, push into this, try to accept inside, reject, go up into the previous day's range, reject, again try, reject, and come back down and settle somewhere into this 8593 kind of zone, because there is a zipper here, and that is the reason I'm expecting that. If it fails to hold that, then I'm expecting a push into this another zipper here with a huge HVN. So then it might push into this zone, and then this is not traded that well, so maybe create a balance around that 560 and 580 zone. That is what I'm expecting, depending on the open, even if it opens gap down below the range, or if it opens into the range and once it pushes down below the range, I'm expecting it to come down. In case it fails to get any consensus either below 15 or below 93, then push back up, come back to test 15, and then go back into the range and test this fair price at 8655. So that is the primary expectation. Any acceptance above 55 would lead to the auction going into the 72 zone, come back down, and then go and push back above the highs of Friday. Now on the daily, what we have is, now it was my data had not uploaded. What happened is, like, the e-signal I was playing with, because the site was down, and I was they have various versions of their data manager. So what had happened is I'd lost my data for the daily bar, and actually it was showing the wrong data at the close. Finally in the evening, when the exchange released the EOD data, it was updated, and what we have on the daily, I had written, I tweeted about a no supply, but actually it's a no demand on the daily. So I'll just show. So this the range is lower than these two bars, the volume is lower, so has resulted into no demand. But now these sort of no demand, I would expect a no demand should not have a lower low. So there is no demand, but this is not a primary no demand, and that's why the software has not marked it. Ideally the high should be higher, and if not higher, at least the low should be higher. Because the low is lower, it is actually not a no demand, not a classical no demand, but the supply is overpowering, because volume is dropping, and while it is going up, that we had seen during the day. But if we see from outside, if we don't see what had happened during the day, then this primarily is very neutral, and points to no supply when coming down and no demand while going up, because the range and volume both have dropped, but the range has broken the low, whereas there is the supply has not overtaken, and also the range has not expanded. So in that sense, it's neutral. On the Nifty spot, it is a clean upthrust, treasury upthrust, so a third degree, because a narrower range closing at the lows, and not fetching any demand. The supply is overpowering the demand. Huge volume created on the spot today. Now let's have a look at Bank Nifty. So Bank Nifty open just below the point of control, tries to push back up. This anomaly is repaired, and then B period pushes back into the close, doesn't find anything. Day time frame is active. We are trading within the range, but post the F period, it gathers momentum on the downside. Once that IB is broken, it tries to push back into the developing POC, into this area, and then again pushes back down, and finally a spike down. Not a huge spike, but a spike down into the close, and just above the reference level of 19610. If it fails to hold this, then we are expecting to close this gap and also go into this spike. So around about 180 to 200 point drop from there. On the 1 minute chart, we have a clean channel move down. If you can like visualize, this is a channel forming, so goes back up and then channel move down, and which has taken a shape of a falling wedge. I would not consider this wedge, because tomorrow the level will be much lower to break out. So for us, the breakout, suppose we consider the balances, so this is the thickest balance, so any move above this would fetch some demand and would like to push into this initially, and then push into the higher balance in the next stage. So that is what we can make out from this. A huge spike coming into the lows, but getting rejected due to no demand into this entire zone. If you can see this, after this spike, this should have fetched buying, but so it goes into a channel. It goes into a channel move up, breaks down again into a channel. So a lot of channels in BNF to trade intraday. Now on the 15 minute, most of the time trading below the day mid. The moment it goes there, gets supply into the previous day VWAP as well as the day mid, and then finally all pushes down are getting absorbed. The supply is getting absorbed when it comes down into the lows, but again it's not able to fetch any demand on the higher side. See, the delta goes like completely, and this was evident like yesterday. If anyone would have seen the digest, I was saying that there is a lot of selling happening in this zone. The delta is huge negative, tried to absorb the supply in the initial part, but then finally failed, and again it has, during the close, it has fetched a lot of selling. So expecting this to fill the gap in today's trade. Let's have a look at the Renko. Now today we can go back to the 120. So impulsive move down gets rejected. Again, impulsive move up gets rejected. Expectation is impulse, pull back, impulse, pull back, impulse. This impulse falls short into the previous day mid. A very mechanical type of support results into an impulse up, pull back, impulse up into the day mid, again a selling opportunity, comes back down, starts zipping. Now when this happens, it gets messy, and we need to again wait for it to go into a reference level for selling. This rejection is good. Pivot point of yesterday as well as day mid, just below the highest traded volume of the previous day. This is getting like Bank Nifty. I'm like amazed by the way the Bank Nifty is getting clearer and clearer. Better auction, better impulses. So impulse down, pull back, impulse down, pull back, impulse down. So this gives like a good opportunity for trading. Even if we can fetch like what I expect is 32 points with a risk of 15 points, and usually it ends up giving around 50 to 60 points in the final lots left. Now the expectation for today, I'm expecting open into this zone, so into the below that reference of 19610, push into 19550 and check for any if it can fetch. Let's go back and see. So this is the reference which I am looking at. We'll move it up so that, okay, let me clear this and draw again. So open into this zone and then push into this HVN and check if it can fetch further supply. If it can fetch further supply, then carry its move down into the 19415 19420 zone. In case if it does not fetch supply into this zone, then push back up, test back this HVN, push into the 600 zone, and if the open is somewhere here, try to revisit the open. If it can fetch demand, then go into the previous day's range to check this HVN zone. So that is the expectation primarily. If it cannot stay lower or cannot fetch enough supply here, then I'm expecting consolidation in the range of this Wednesday. In case if it's able to fetch any demand into this zone of 19660, then move higher towards 710, pull back down and make its way higher into the higher balance. Being event tomorrow, the union budget, not expecting a huge move, but they can like create, if they want to create positions already, they might want to do that, but expecting a lot of volatility even going today and maybe even tomorrow. So expecting the range might contract, but would get a lot of rotations. So I think that's it for time being, and we'll catch up during the live session and see. We'll take it ahead from there and see what happens during the day. Thanks for watching and have a profitable trading day ahead.